Hi, I'm Stephanie and I'm Director of the Insolvency Company.
And I'm Gareth. I'm an insolvency practitioner at the Insolvency Company.
And we're also husband and wife. Gareth and I set up the Insolvency Company to be a friendly face in the world of insolvency, in the hope that if your business is facing a difficult financial future, you'd come to us at an early stage and potentially we could help you to avoid closure.
Today we're going to cover some FAQs and talk a bit more about the world of insolvency.
So how will insolvency impact my personal credit rating and really, I suppose, my financial future?
If we're talking about business insolvency, so we're talking liquidation, that does not affect your personal credit file because it's a business, it's a separate legal entity, it's nothing to do with you as an individual. There are some circumstances where people will ask you, have you ever been involved in a company that's gone into liquidation? It might be insurance. You know, some business insurances do ask, have you ever had a company that's gone into liquidation, and they won't insure you if you have. But they are rare, and usually you just go to another insurer who's happy to provide the service and don't even ask the question. From an individual, if you go into bankruptcy or an IVA, then it will go on your credit file, it will stay on there for 6 years, and it will make it harder to obtain credit until that 6-year period is gone.
But talking to like the business owners, the people that you've helped, how do they feel? So, so a company director, once they've been through the process, how do they feel like after they've spoken to you? What's like the most common feedback you get?
I think it's just relief that they know what their options are, and it's generally not as bad as they thought it was. They always think it's a lot worse, or the consequences will be a lot harsher than they actually are in reality. I think just knowing where you stand and how it's going to affect you, it's just empowering.
Yeah. And then afterwards, do they tend to go on? Do you find that people tend to go on and start another business, or what do you find after you've worked with them?
Most of the people we work with do go back into business, and they may stay in the same trade. It's just restructuring or, rearranging how they do things. They tend to learn from the previous failure. So it's, I think you mentioned earlier, those skills that they've developed, you can't buy. It's life skills. They've learned those lessons and they apply them in the new business.
Thank you. When consumers ring up and they've bought, maybe a voucher for a business that's now closed down, or they've got something they wanted to return, in those situations, what can they do? What would you advise?
There are some protections for consumers in that situation. It often depends on the value of the goods that they purchased. So if the goods were worth between £100,000 and £30,000, and this is each item, we're not talking about a total of, say, 50 items that add up to that value. So if that item was worth between £100,000 and £30,000 and they paid via credit card, they can get the full amount back. And that's through something called the Section 75 chargeback.
Okay.
So if it's a credit card and it meets that criteria, they will get the money back. If they didn't pay via credit card, if they paid by debit card or some other method like that, then again, they can still do a chargeback, but it's through a slightly different process and it's less certain, but there is a good chance they can get that back.
So with most of the businesses that we represent, it tends to be that the consumers, the creditors that basically on the end of the scale, it's unlikely that they'll get their money back. So it's better for them, would you say, to look to try and seek to get their money back or to some compensation through their credit card? Or
Definitely. The credit card process is really easy. As long as they meet the criteria, they purchased it, it's between £100,000 and £30,000 and they didn't receive it or it's faulty or some other thing, they can claim it back using Section 75.
Yeah. I've seen situations where they've paid £100 as a deposit for a kitchen and then the company's gone into liquidation, but the credit card actually gave the full £20,000 back to the customer, even though they only paid a £100 deposit. Is that true?
It's not about, if they only paid £100, they won't get the full amount back. If they paid £100 on credit card and then paid the rest of it via cash, they will still be covered from the credit card company for the full amount. They have to have paid that full amount to get that full amount back, but they're covered for the whole amount as long as they paid any of it via credit card.
Thank you. That's quite a common myth, that one then.
Yeah.
Thank you. in terms of the directors that you talk to, so like, you know, on a daily basis, you're talking to directors, or, you know, there's somebody that was listening to you talking, what do you say to them when they're saying, you know, they're worried about telling their family, you know, worried if they're going to go to prison, like what the implications are, like what do you say to them?
I think I just try and put it into context, and I just explain, you know, the number of people I speak to in their situation. They think they're the only one in that situation, and, you know, sometimes they feel the shame of the business failure, or, you know, other things like that. And I just explain that their situation is not unique. You know, there are so many people in their exact situation that have been through this before. In terms of will I go to prison? You're not going to go to prison because a company fails.
Okay.
You know,
so is that why, like, so they set up like limited companies? Are there different laws for, like, you know, sort of police type matters and companies? Like,
yeah, you know, a liquidation is not a criminal matter; it's a civil process.
Okay.
You have debts, and if a creditor takes you to court, they take you to the civil court. They're not taking you to Crown Court. They're not trying to prosecute you.
I suppose it's just, you know, as a person, if you haven't been through this process, you just see it all as one big kind of big scary, you know,
yeah,
process.
And really, it's an administrative process. That's the reality. People are afraid of what they don't know. Once they've been through it, they realise actually it's not that bad. Really, it's a process, and it's painful because you're closing a business which you've probably given a lot of time and energy towards. But it's an opportunity to go again. It doesn't mean you can't start again. You can't take those lessons and move forward.
Yeah. Again, I think people worry though what other people will think more than anything else. So, you know, what would you say? You know, will everybody know? Like,
I mean, a liquidation is public information. It's on Companies House. If someone wants to go and search for it, they can search for it. But I think there shouldn't be a stigma about business failure, because I think, you know, 3 out of 5 businesses fail anyway within 5. Is it 5 years?
Yeah,
is that the
I mean, like, depending where you look, you get to different statistics. But so the truth is, it's like,
a lot of businesses fail eventually anyway. And if you were brave enough to set up a business and to have a go, then you should be commended for that.
Yeah, I think people don't realise the kind of risk that you take when you launch a business, and that, you know, like you say, the cash flow, and when you take on employees because you want to make sure you're paying their wages. And, you know, we often compare ourselves to, you know, the Starbucks and Googles of the world, whereas in reality, the people we talk to are like the SMEs, the small business owners, you know, that they've got a close-knit team and families, and everyone in the local area knows them. And obviously it's very personal. But I also think that we have to remember that the law's been set up, and like limited companies specifically to encourage, and, you know, we were saying about MVLs, when it works out, you know, so you pay less tax, it is to try and encourage more people to have a go, to like encourage more entrepreneurs, because actually I think that's the foundation of the economy.
Yeah.
And the more people that you can talk to and reassure, that can potentially then go back out, and, you know, they're going to contribute to the economy even if they get a job, or if they set up another business. But the last thing I think we want anyone to do is to feel like it's all just too much, it's too overwhelming, and they bury their head in the sand, and, or, you know, even worse, and, you know, and actually just talking to the right people. That's the difference, isn't it? Talking to the right people. You know that the advice that you're giving is regulated and you're really well qualified, but also you care. Like, we really want to see the economy booming. We want to see more entrepreneurs taking those risks, doing well. And so, yeah, I hope that more people, when they watch this and listen to you talking, that they'll come and speak to you.
One of the questions I always ask people is, what do you want to do next? And I'm asking that at the start of the process, before they've finished, before they made a decision whether to close the business or not.
And do they even know at that stage?
Yeah, what do you want to know? What do you want to do next? Do you want to stay working in this industry? Do you want to go and take a new career? Do you want to stop working as a director and, and take an employed role? What is it you want to achieve? And then we can start talking about how you can achieve that, and if it's possible.
Yeah, and that's the side that I take. So I'm very much about the well-being and the mental health side, because I think, well, if you've had a struggling business, you've probably been putting in all the hours under the sun, and where you're probably worried about telling your family are probably going to think, wow, do you know what? I might actually get to see you in the future if this business closes, or, and that something changes. Maybe I'll actually get to spend more time with my partner, or, with the children. And actually, for every thing that, that's challenging, life is about balance, isn't it? There's probably an upside to it. Maybe a bit more free time or a new lease of life. And again, just coming to speak to a professional advisor who can help give you the correct options. Because you normally, like when you send people that initial advice, I take it there's normally more than one option on there.
Usually, and it depends on the circumstances. Sometimes the business needs to close, and it's about how they go about that.
Okay.
Other times, it depends how early they come to see us. It might be they can rescue the business, or they do not need to liquidate. So it really just depends on how early they come to see us and what the situation is.
Thanks. If you have any questions, if your business is in difficulties, or you'd just like to know a bit more about insolvency, send your questions to the Insolvency Co.